Hello, I'm David Chaston with 90 at 9, brought to you by Interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock. With news, more analysts are expecting 2018 to bring higher economic growth. Firstly, in the US, the battle for a signature Trump tax cut is shaping up to be one between two Republican factions. The House Republican version is quite different to the Senate Republican version. Both are enormous, offering $1.5 trillion in tax reductions. But half the benefits will go to the 1%, according to one analyst. Golf course tax breaks are not being changed. Substantial delays in getting this program passed are now expected. Chinese consumer inflation edged up to just under 2% in October, its highest level in 2017, but the signals are that the rise is losing steam. Producer prices are up 6.9%. And Moody's are reporting they expect Chinese residential property sales to fall in the second half of next year due to extended government property restrictions. They say sales may fall by up to 5% for the second half of 2018, following an estimated growth of more than 7% in the full 2017 year. The World Gold Council has released its third quarter stats, and that shows a sector in demand decline. Demand for the quarter was at its lowest level in nearly 10 years. Supply, on the other hand, was its highest level in 13 years. The price in US dollars has risen 10% since the start of 2017, but with demand-supply mismatch like this continuing, it's hard to see how that's going to be sustained. And more supply is coming. The European Commission has raised its 2017 growth forecast for the Eurozone and expects the 19-country bloc to grow by 2.2% this year, its fastest pace in a decade. Housing finance data out in Australia yesterday looks a little grim and far below expectations. Finance commitments for owner-occupied housing is down 2.1% in September compared with the same month a year ago. Finance commitments to investors is down much more sharply. It's down 6.2%. In New York, the US Treasury 10-year yield is still at 2.32%. Moody's is reporting that defaults in junk-rated corporate debt is falling worldwide and will be at a rate of 2.7% in this year. It was at 4.8% last year. It is marginally higher for 2017 in the US at 3%, and they see significantly lower rates of default in 2018. A broadly expanding global economy is driving the good experience, and that growth is up 3.2% in 2018 according to them, and 3.1% in 2019. But the situation is getting a lot tougher for HNA. Last week we reported them having to pay 8.875% for some emergency $300 million short-term funding. Now they have done a repo deal in Europe for another $35 million. The price of crude oil is unchanged at just under $57.50 a barrel, while the Brent benchmark is just over $63.50 a barrel. The price of gold is also unchanged at $1,286 an ounce. The Bitcoin price has had a very sharp correction from yesterday's heady heights. It is down to $7,182, a fall of 7.1% on the day. The Kiwi dollar is slightly firmer today. We're now at 69.5 US cents. On the cross rates, we're at 90.7 Aussie cents, and against the euro, 59.7 euro cents. That puts the TWI at 72.8. I'm David Chaston. That was 90 at 9, brought to you by Interest.co.nz.